The problem our economy has is the Fed. They don't have a feel for the market. They don't understand necessary trade wars or even strong dollars or even Democrat shutdowns over the borders. The Fed is like a powerful golfer who can't score because he has no touch. He can't putt. It's quite an analogy.
Sounds like me.
Well, Gene Marks is a CPA and president of the Marks Group, a financial management consulting firm, and a nationally published columnist focusing on small business. Gene, Merry Christmas. Thanks so much for being here today.
Merry Christmas to you, Anita. Thanks for having me.
Yep, you bet. Okay, let's just put it plain. It's not a pretty picture out there. Does it help, though, that the Treasury Secretary, Steve Mnuchin, is calling top banks to reassure them that everything is okay? Or does that in itself create a sense of panic for people?
Yeah, apparently it wasn't very helpful, particularly after he spoke to the banks in that conversation. The market fell more than 650 points. I mean, Anita, this isn't really it's not the economy. I mean, I was saying in the last bit before me, the economy is going strong. GDP is forecasted next year to be anywhere from 2.5% to 4%. Unemployment is at historical lows, and confidence is very high, both consumers and small businesses. We're going to also come off a very, very strong retail season as well. I mean, retail sales from the holidays are expected to be up more than 5% over last year. So I just want to be clear, this is not the economy that's driving the stock market drop. Yeah, the president's comments don't help. The Treasury Secretary's move to calm markets didn't help. But what's really going on is the rise in interest rates. And let me explain that a little bit further. Back in the day, for the past 10 years at least, you and I and most of your viewers didn't have a lot of choices where to spend our money or invest our money because interest rates have been so low. I mean, interest rates were near zero right after the recession, and now they are the highest they've been in the past 10 years. That's what the federal funds rate is now. So I think what's that providing for a lot of us is more options. Before, where would you put money, other than the stock market or under your mattress? Now we can save money. We can buy bonds. We can put money in money market accounts. And because of that, a lot of investors are pulling their money out of the stock market and using some of those options, particularly people that are older, facing retirement, ones that are looking for a little bit more security. So, for the past few years, the market has been sort of the only game in town. And that's why we've seen the market increase so much. Other factors also contributed. But because we have some options now, I think you're seeing a big adjustment. And I think that investors are saying we'd like to put our money elsewhere because we'd like a little bit of mix and a little bit more security with our savings.
Okay, and Gene, it's interesting that you mentioned strong holiday shopping numbers. We haven't talked a lot about that, but if you believe what you read, the holiday shopping numbers are strong this year. In fact, the best ever. But just getting back to the stock market for just a moment, we keep hearing rumors that the president may want to change the Federal Reserve chairman, maybe put somebody else in there. But that doesn't help the stock market either, does it?
No, it doesn't. I mean, the president, I think, has been told by his advisors that he really is unable to change. You can't really fire the head of the Federal Reserve, and the signals that would give to the markets would be bad and cause even more volatility. But look, I mean, Anita, the market itself right now, it's declined about 12% over the past few months. It's up almost 30% since 2016. We've all done pretty well, people that have had money in the markets over the past few years. So the fact that it's declined so much and been in a correction, that's not good. But my take on it is that Wall Street is giving the American public a Christmas discount to buy stocks.
Well, there you go. That's a positive way to look at it.
Yeah, we've been at 25,000 already, yes, and one thing I've learned about the stock market is once you've been there, you're eventually going to get back there again. And I think a lot of smart investors are going to take advantage of the prices where they are now.
Yeah, I was just going to say we got so used to seeing the stock market at 25,000 that anything less now seems unsettling. But you're right, good opportunity to buy. So thank you so much for that tip, and Merry Christmas to you.
Merry Christmas, Anita.